All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. Before we get into any market-related discussions, a quick disclosure of Derrick's current positions as of our recording here today. Again, he is the head trader at T3 Trading Group, so here's a look at what he's currently in. The title of our stream today, Derrick is AMD, the new AI leader, getting your reaction to this new deal between AMD and OpenAI. You know, NVIDIA has long time been like the leading chip stock in the AI space, with, of course, plenty of other chip makers being involved, but NVIDIA being the big dog on campus. But then today, OpenAI announcing that they're looking to take a stake in AMD, 10% stake, I think, via a chip deal. What's your reaction to today's announcement and what it means for the space and how this might change the chip maker space and who's the big dog on campus?
Sure. Well, first of all, it's another bullish Monday, the market up across the board. And
Yes.
it's a day that ends in Y. So therefore, we have a new AI deal that got done because that happens literally every single day. There is some sort of an AI deal announcement that has occurred. I mean, things have gotten interesting recently with some of the circular financing that's ongoing with these deals. You know, it really started with Oracle in September with their OpenAI deal, where OpenAI basically promised them $300 billion in future revenue, even though OpenAI doesn't have $300 billion to be able to spend on Oracle, at least not at this point. And then we got AMD today. So there were two main thought processes that crossed my mind this morning when I saw that. One is, sure, does AMD belong at a higher price than where it was on Friday? Absolutely, it does. 37% higher? I don't think so. This rhymes in a lot of ways with the Oracle deal to me, and Oracle was a great sell on that first day on that earnings report when they gapped it up 40%. It's the same thing. And Oracle, pulled back from stable on my chart here, a high of 345 that next day to, last week it was at 276 or something like that. So you had a pretty big pullback. It never fully retraced it, never fully filled its gap. It never went back to where it was in the beginning of September. So there is definitely new value there for Oracle. It's good news, but it wasn't 40% news for Oracle, and it's not 37% news for AMD. So I liked the idea for an AMD short this morning. That worked great. It's now only up 27%. I actually think it still belongs even a little bit lower than this. $200 is really my target for the AMD short. So that was the first thing that came into my brain. The second thing that came into my brain is pretty much exactly what you're talking about, Greta, is what does this mean for NVIDIA? NVIDIA has been pretty much the only game in town. I know AMD and AVGO have been doing their best to compete, to catch up, but it has been the NVIDIA show. And that's such an important deal from OpenAI. It provides so much I'm struggling with the right word here, but it provides so much confidence, for lack of a better term, towards AMD
Mhm.
as a stock and the direction that their chips and their productions is actually going. That I think it really confirms that NVIDIA is no longer the only game in town.
Mhm.
So in my brain, I feel like NVIDIA should be down huge on that. If AMD was up 37% this morning and it's up 27% now, the fact that I'm looking at NVIDIA down 0.5% on that as we're having this conversation just continues to be the status quo of this market. Really is what it continues to be, where stocks cannot go down, they cannot break support levels. I can't remember the
Mhm.
last time I saw a legitimate stock, like a real stock, or like the indexes, really break a major support level. And it happened again today. I think that NVIDIA should be trading back down to 170 on this.
Mhm.
I think that NVIDIA should be down 7% for AMD's up 27 to 37%, not down 0.5%. So 184 to 185 is a huge breakout level in NVIDIA. It broke out last week on that, and it retested it this morning. The low is a little bit below 184, but it held support. It held support because that's all that happens here with stocks. Everything holds support, everything goes up, all news is good news. Doesn't the circular financing, none of it matters. We just continue to troop on higher. But that's the key spot to watch for NVIDIA is 184, 185.
All right. When you're looking at AMD, like you mentioned, up 37% earlier today, 35%, 30, now 27%. You already talked about how you were able to short the name successfully. But what would be some of the levels and the sessions ahead as this news gets digested by market action? Because as you tell me all the time, markets, correct in times of digestion and all. So as we digest this news over the next 5 sessions, where would you be looking at levels on AMD, and how has this changed the chart? Obviously, some news can change a chart and moving forward. So
yeah, so AMD is in the AMD is sure. Yeah, I can pull up my charts real quick. AMD is completely in the stratosphere, as you'll be able to see here in a second when I get this screen share up. Boom, there we go.
Yeah.
So AMD, if you go over the daily chart, it's just completely in the stratosphere. I mean, very, very similar to when Oracle gapped up 40%, just completely in the stratosphere. Nothing on the left for Oracle. It's all-time highs. When you're at all-time highs and it happens with a gap that is this big, there are no levels. And it almost, from like a level perspective, it might as well be an IPO. When Oracle gapped up that day, the only reference point is 260, and I'm looking at a stock that's trading in the 320s, 330s. There just are no levels. AMD actually does have some levels. It has traded up here in the past. AMD had this like wild bubble move, wild like upside capitulation parabolic move back here in 2024. So it actually is retesting those levels from 2024 and held that absolute high of that day pretty much perfectly. And that represented the all-time high, and it sold all the way down from there to our April low of 77 to now be all the way back up there this morning. So, but for the most part, kind of a similar situation here. There's not really much in terms of levels to go off of. You have the day high in AMD, that 225 area will be really important on the upside going forward. But on the downside, you don't really have much to speak of. You've got like 187 as the last major pivot high that came in August from the stock. So if it ever works its way down there, that would be a notable level. But really, whenever I have a stock that gaps this big, it's super extended, I just need to pay attention to how this thing corrects over time. Does it have a deeper price correction? Does it go sideways more? If you go over to Oracle as a little bit of a comparison, Oracle had the big upside tail on day one. On day two, it gapped up and sold and broke day one's low. On day three, it sold further and closed on lows. Didn't quite get to this ADMA on the daily, but it had a pretty good initial price correction. Then it basically went sideways for 4 days. And then it took a total of 7 days of price end time correction for the ADMA to catch up. And then I'm not surprised that at that point is when the stock saw an attempt to get bought back up. That attempt to get bought back up actually eventually failed. That becomes trickier. But what I really want to see is, what does AMD look like when it's no longer extended? When will it no longer be extended? It'll be extended when the ADMA catches up to price or price catches up to the ADMA. And at this point, we're at day one here. They did sell off the high. My target was 200. 200 is completely arbitrary, by the way. I just thought, at 200 would still be up like 20% or something like that. And in my brain, it just seemed fair. So it was kind of just like an arbitrary target that I made for where AMD could pull back to today. So far today, it's pulled back to 205.70. I would argue that it's still trading a little bit heavy. It's not trading great. It tried to stage a bounce and get back above 210. It's been struggling to hold above 210. So we could still see new lows today, tomorrow. But what I really want to see is over the course of, similar to Oracle, however many days it takes 3 days, 7 days, 12 days. I can't be sure. It depends on the price action. What does this thing look like when the ADMA actually first catches up? And that's usually like a favorite trade of mine. And it's a trade that works on multiple time frames. When you have a lot of extension on a 5-minute chart, when you have a lot of extension on a daily chart, that first test of the ADMA, if you can have a good pivot low into that first test of the ADMA on whatever time frame you're looking at, a lot of times that is a good trade. It's a good spot to be looking for the thing to bounce in the original direction in which it gapped. And you can see here with Oracle, that trade actually eventually failed because this thing made a new low and it got below this pivot low here from September 18th. But it failed after it bounced for $30. So, if you could have a good entry there and capture even more than almost $40, if you have a good entry there and you can capture $30 of that move, even if it eventually fails, if you lose money, it means that you're just an absolute and utterly greedy jerk with your game plan. You make money on that every time, right? So, we'll see what AMD looks like as it continues to correct through time and through price over the course of the last few days. I'm sorry, the next few days. But it's the bottom question on what this means for the overall market that I'm actually most interested in right now, as you see this like circular financing that's ongoing. It feels very late stage. It feels very tech bubble-esque. It seems to be what everybody is talking about. And you've got, Jeff Bezos spoke at the end of last week, and he described what's going on right now in AI as like a good bubble. You had one of the Fed members basically use the bubble word last week. You had Paul Tudor Jones on CNBC this morning with an interview that is really making rounds today.
I wanted to
Where
ask you about that. So
yep. So it's
yeah.
another one, basically saying, where are we? Are we in 1999? Well, 1990. If you're saying we're in 1999, you're saying the market can go higher, but it's in a bubble. So it seems like the consensus is the same across the board. We're in a bubble. It's the when, the where, the how that the bubble no longer continues. That is the big question. And there's just a lot of things underneath the surface with this market that I still don't like. Like I would describe this market the way it's been moving higher as unhealthy. Um, it's not moving higher to me in a healthy manner anymore. We're seeing the VIX move up with the market every day. I saw it. So the chart I saw this morning that was a phenomenal chart was that the VIX. So the S&P was up every single day last week. It wasn't necessarily up a lot, but the VIX was also up every single day last week. And guess what? Today the market is green and the VIX is also green. Again, by a little bit, it pulled back off of its highs a lot, but the VIX is still green. We're potentially going to be having, if the market were to close right now, 6 days in a row of the market being higher with the VIX being higher. And anecdotally, before I saw this research report in this chart, which I think the source of it is from Goldman Sachs, anecdotally, I pay really close attention to when the VIX is moving higher with the market, because every time I've ever seen that occur in my trading career, it's never been able to happen for more than 2 or 3 days. And then after 2 or 3 days, it's always seemed like the bottom falls out in the market. The market has it doesn't necessarily have a bear market or even a full 10% market correction. But as soon as you start to see the VIX move higher for 2, 3 days in a sustained way with the market, the bottom falls out of the market for at least a period of time. And then the research report I read this morning with the chart that I saw this morning showed that the VIX last week moved higher and the S&P moved higher every single day, so 5 days in a row. And that has never happened before in the history of the data set of the VIX going back to 1990, which that's incredible to me. And again, today is potentially day 6. And it's not massive. It's not, the S&P was up like 1.1% last week. It's not like I'm seeing the S&P move up 1% a day with the VIX moving up massively every single day. So it's not like it's a little bit different. It's not that like parabolic move that I've seen in the past where you get that 2 or 3 day vol up, spot up, things go parabolic, and then the bottom falls out. It's a little bit different. It's a little bit grindier. Maybe that's the reason why it's been able to last and be so steady. But it's like we get a different AI deal done every day. They've hit the point where everybody knows it's done. this is the bubble, but we want to ride the bubble, right? So it's going to continue to go up because it's a bubble that is not yet ready to burst. I don't know how anybody can actually say it's not yet ready to burst. I think it could potentially burst at any time or not. Your guess, I think, is literally as good as anyone else's on that. And everything under the surface just looks unhealthy with this market rally continuing, yet we don't break a single level of support. So I don't know. I still stand by the thought process that if this market ever could actually go down, there are certain triggers on the downside where if they ever hit, it's going to go down violently and it's going to really feed on itself. But we can't break support levels and we can't get the VIX to actually hold above 17, which is another big spot that I'm looking at. We briefly got above VIX 17 again this morning and we came right back down. And it's like, it's all there for it to happen, but it's not going to happen until it does. I don't know what else to say.
We just got a question from YouTube. Hi, Derrick. Japan 225 index, so CNKY is your ticker. Today went up 5% into the stratosphere. Daily looks like a parabolic move. How would you approach a mean reversion trade on a daily time frame? From Cyril.
So first of all, I don't love trading the foreign markets via ETFs because they're going to be so gappy. You're taking on a lot of gap risk there. And, the nature of a parabolic move, the nature of an up move, I'm almost kind of just describing it even with US equities right now, is that it can continue. It continues until there's like no greater fool left to buy the market. But you got to look at what's underneath the surface with the Japan move also. So underneath the surface with the Japan move is the new president or prime minister, whoever it is that they just elected, is like a super dove. So they're just expecting a tremendous amount of stimulus to come into Japan. So it kind of goes back to the age old saying of don't fight the Fed, except for Japan, right? And I'm very nervous to short the Japanese market, honestly, right now. Personally, it's a trade that I would avoid. I think it's a tricky trade. Japan can trade really volatile. Does anyone remember? Keep talking about August 2024 recently, but the trigger for that was really caused by the VIX positioning squeeze. But the trigger for the VIX positioning squeeze was out of Japan. So you could get really big moves. You could think, hey, let me start shorting, the Japanese market right now, and then you'll sleep at night if you're based in the US or wherever on this side of the world, and then Japan is continuing to move higher while you're asleep, and you get the next gap up and the next gap up. That you could get 3 days in a row of 5% up moves on the expectation of more Fed stimulus. So Japan is something that I'm going to stay away from as a trade. What I'm more interested in off the Japan news is the weakening of the yen and the strengthening of the dollar that's a result of it, which also, by the way, is feeding to the Japanese stock market, right? The weaker yen, higher Japanese stock market, in the exact same way that when we get a weaker dollar, it tends to lead to a higher US equity market. But the interesting thing is the weakening of that yen has actually led to a little bit of a strengthening of the dollar compared to the yen. And if you look at the UUP ETF, which is what I like to look at as a gauge of the dollar, it's up this morning, and it's not only up, but it looks like it's potentially break out of a range to the upside. And on top of that, we know that a lot of people are short the dollar right now. So I'm actually more interested in what could happen if the dollar could actually squeeze higher and continue to strengthen on the Japan news, and therefore, if it ever actually could maybe cause the U.S. equity market to have a down day for, we usually get one a month, so maybe we'll get a down day in October. Maybe it'll be because of the dollar.
Everyone's dream, a down day. So you don't have to just keep buying higher and higher and higher. All right, something that could possibly create some volatility in specific names is coming. It's earnings season. Earnings season is coming. So maybe we'll get some spots to buy some specific stocks off of earnings reports and sympathy plays, etc. Cyril said thank you for your answer on that Japanese question. So the official kickoff earnings season, like the official, is the big banks next Tuesday. So I guess now JPM reports on a Tuesday always instead of a Friday. That's weird. But anyway, Thursday we'll get the first trickle of reports, PepsiCo, Delta Airlines being some of the highlights Thursday morning ahead of the market open. When you're looking at this earnings season as a whole, with the backdrop of this market that cannot ever go down, what are some of your expectations and what are you focused on as a trader when it comes to earnings reports and what it could mean for the market?
Sure. So my expectation for this earnings season is actually the exact same, and it's a little bit early, but it's the exact same as my expectations were for last earnings season. And it's a really interesting dynamic that we went into last earnings season, and we're going into the exact same one this time around. But all measure, earnings expectations are too low right now, and it was the exact same way going into last earnings season. Last earnings season, you had a tremendous amount of beats. Everybody beat, everybody got it up. But I'm more interested in the reaction from the market than whether stocks beat or miss. So what was interesting about last earnings season is that you had a tremendous amount of beats because earnings expectations were too low, but you didn't have a tremendous amount of great reactions from stocks. Like, sure, you had some, but my biggest sarcastic joke that I've been making now since last earnings season is that the only thing that can bring a stock down is when it comes out and reports an excellent earnings report. The best earnings reports that I saw of all of last earnings season were the top for the stock. Sometimes it was the top for 3 days. Sometimes it's been the top ever still to this day when you look at Meta and Microsoft as examples. So I have the exact same thought process going into this earnings season as last time. You're going to see a lot of beats because earnings expectations are too low. But all these stocks that are up 100% since September 1st, that will probably be what derails them, is a really good earnings report. And if we pull the charts up real quick on my screen, I could give you some of the best examples. I saw a few of the best earnings reports I have ever seen in my entire career last year. One of them was Meta. That's basically the high for Meta. I find it made a new high for a couple of days there, but it never really continued dramatically above the high that happened with Meta on that phenomenal earnings report. Microsoft. This was like the VIP earnings report. And if anyone remembers, Meta and Microsoft happened the same day. It was the same day after hours. It was kind of the same thing. We're like, oh wow, the market actually looks a little bit precarious here. And then Meta and Microsoft came out with the most monster earnings reports ever. The entire NASDAQ gapped up specifically because of Microsoft and Meta. Look what Microsoft did. It's the high still, a whole quarter later. It's the high, not even close. If you go over to the semiconductors, let's see if I can even find the NVIDIA report in here now. But NVIDIA, I can tell you for sure, was another one. It might have been here on the 28th. It might have been this one on the 28th. They're at the end of earnings season. Phenomenal earnings report from NVIDIA. That was the high for a month. You know, we've only gotten above that a month later. That was a phenomenal earnings report. AMD, obviously, you know, here we are with AMD, but AMD hasn't been able. AMD, and by the way, most of these stocks, they're running into the report, right? AMD, like, running into the report was super strong. It reported here on the 5th. Fine, it ticked above that for 2 days, but was never making new highs. And these reports are not good. I'm not giving you a single good earnings report right now, Greta. I am giving you earnings reports that were like knock your socks off earnings reports with how bad, beat on every number, guided up, like everything was phenomenal. Micron, you know, 2 quarters in a row actually. If you go back to June, Micron was on this insane run. The only thing that was able to stop it was Micron reporting phenomenal earnings on June 26th. That was then the high on this stock for 2.5 months, and then it started breaking out again. And then more recently, this one was short-lived. But here, Micron reported that earnings report in September was like beyond phenomenal. It crushed. It absolutely and utterly crushed on every metric. And I remember real quick, the stock after hours went to like 173 or something on the quick uptick because the numbers were such big beats. And then immediately was back to flat. And then the next day we were watching the thing sell off. And then the day after that, it gapped down. And then, obviously this market's been going crazy. So after this one only gave us 4 or 5 days before it was able to make new highs, then obviously continue in October. And the analysts are chasing, like they upgrade some brilliant analysts, I think at Morgan Stanley, waited for the stock to go from 115 to 195 this morning, and then he decided to upgrade it. So congratulations to that analyst. Let's make sure to give him a really big bonus. But it's been my joke, but I think it actually continues this earnings season. Anything that's been up a lot into the report, the only thing that can stop it from continuing to go up is reporting a phenomenal earnings report. And I'm actually those stocks I just mentioned actually reported a bad report. They traded down, all of them, on every report I just mentioned to you was phenomenal. What if they actually just were to come in line on expectations? It'd be the end of the world. So I'm bullish on the fact that these companies are going to beat and raise. I'm bullish on the fact that we are going to see more buyback announcements, and buybacks are super strong for the market. I am bearish because I think that we're just up too much into those reports. And it looks to me like the exact same trend of what we've been seeing, which is the bar is just so high on where a stock is trading into the report that a good report is not good enough. And we've seen even a great report is not good enough.
Right. Yeah. All right. So on a Monday where we're still waiting for delayed data, because remember we didn't get the jobs report last week like we were supposed to. So it's supposed to come on Friday if Congress can get their act together. They're reconvening today to vote on a stopgap. But we might get some more delays on data. So in a market that's waiting for data still and cannot seem to go down and doesn't seem to care at all that the government is shut down, are there any setups that you currently like for trades?
I just continue to be kind of a similar thought process right now, and obviously it's been to my own detriment. I think these last couple of weeks, I can't get myself to buy this market for anything more than a day trade. I don't trust it. I view the move higher as unhealthy. If it's a shorter term trade or you're buying one of the meme stocks, one of the Wall Street bet stocks that's breaking out and continuing for a 1 to 3 day trade on a breakout, fine. But I can't get myself to actually buy anything here. Bigger picture, I don't trust this market. What I want to do is short. I want to triple my short positions is what I want to do, but I can't do it without a signal. I need to see the market break a support level with the VIX squeezing higher to finally believe at someday, and I can't tell you the timing of it. I certainly hope it's in the month of October, because once we get out of the month of October, things are going to become much more seasonally bullish. But I gotta think that someday here you're going to see the VIX hold above 17. You're going to see the market break a support level, and when the market actually breaks a support level and holds below it, that might be the first time where you can press downside. You have not been able to press downside in this market. The market never breaks support levels. And I've been also sarcastically copying and pasting the Investopedia definition of support into the virtual trading floor regularly recently, just to remind people support is an area where there tends to be more buyers and sellers. So that's why every support level continues to hold. But someday you're going to break that support level. It's going to feed on itself and you'll be able to short on the way down. That's really what I'm looking for. It starts with the index level. It starts with the indexes for me. I need to see correlations increase at the same time. I need to see a stop of this dispersion. And then I want to see what's trading weak and what can I pound to the downside when that actually occurs. I think that's the bigger, better money, but you have to be able to time it properly. And timing it properly means that you're not just blindly shorting these afternoon grind ups that we get every single day. That you're shorting not just like there's been some good cute shorts for like day trades into larger gap ups again, like this morning, which we were able to identify. Like, let's short the gap up in the S&P, let's short the gap up in the NASDAQ. But all we're really looking for is just a quick pullback in the beginning of the day to like a 5-minute chart equilibrium. I need to see that pullback in the beginning of the day not just give way to the upside grind, but actually lead to a gap fill lead to a break of support, a bounce back that retests support, and then after retest of support, there's a lower high that actually comes in. When the lower high is confirmed, that's the lower high that I want to pound the market to the short side off of. But you got to be patient and let it come to you, because otherwise, if you're just blindly shorting this market, which I've been doing a little bit also of, it hurts.
You've been very honest with both me and Mike that this market is a bit difficult for your personal strategy and how you trade. You start at the index level and look deeper from there, and the index level is just higher and higher, and there's no signals on where to buy. So how have you had to adjust your own, not strategy, but your own mindset when it comes to this market to keep yourself out of trouble and to make yourself sit on your hands and wait when it's needed?
Yeah, I mean, it's exactly like I just said. Flat as a position, or being light is something that you can be. Being light and patient. Honestly, even being light without the confirmation is painful right now. But flat as a position, being light if you can afford it is appropriate, and you just have to wait for the signal. You have to recognize exactly what I just said, which is you don't have to capture the absolute top in this market. The trend is your friend. So if you don't believe in the upside of this market right now, you have to recognize it could continue because the trend is that way. But you can wait for that trend to change. You can wait for a support level to get tested. You could wait for it to break and there to be a lower high that actually comes in and get confirmation of that lower high. And then guess what? If you have confirmation of a lower high, that is a potential reversal pattern that's building out. And that is when you can hammer things to the short side. So I've always been a big believer in have a thesis for the market based on the evidence as it presents itself. My thesis on the market has obviously been bearish, but guess what? You can be wrong on your thesis and not lose money, or lose a minimal amount of money if you manage risk well and you wait for the actual technical signals to confirm the thesis. And that's always where I personally have made the most amount of money. Is sometimes I'm right, sometimes I'm wrong, but when I'm wrong, I try to make it so that the money that I lose is more minimal, and when I'm right, I try to make it so that the money I make is significantly more, because I have the actual technical confirmation that I've been waiting for that I can trade versus. And that's key to it. But it's been a tough environment, because it's like I said in the beginning, there continues to just be one signal after the next on why we should go down. There's so many things that could feed on itself into a downside move. I just mentioned, VIX up with the S&P up 5 days in a row last week has never happened in the history of the data set going back to 1990. Today looks like it's actually going to be day 6. So, the thing about records is records are meant to be broken. And if you trade long enough, you can and will see any and everything that can happen. But you still take note of it as like, wow, this is just one more piece of evidence that could help us to trigger to the downside. But like I said before, it only happens when it happens. And instead of just guessing the timing on that, you use your technical analysis to provide the timing for you. Let the support level break, let the reversal pattern build in, let the retest of support hold as new resistance. When's the last time we had previous support hold as resistance? I can answer that question. March, not even April, right? Because April was, we just V bottomed.
Yeah.
March is probably the last time that actually happened. So it'll happen again someday, but maybe it'll be tomorrow.
You never know. Could be. All right. Derrick is a real trader, so I want to let him get back to that. Again, he is the head trader at T3 Trading Group. It's the prop trading firm associated with us here at T3 Live. You go to t3live.com/do live to get Derrick's free ebook if you'd like to learn more about prop trading, the benefits of prop trading, how you can work with Derrick and his team. Again, that's t3live.com/do live. It's a totally free ebook. And Derrick, I hope you get some volatility this week for yourself and the team. And maybe we'll get a down day. Maybe. Have a good week,
Thanks,
and
Greta.
we'll talk next week. All right.
You too. Thanks.